Does the thought of how much work goes into purchasing a home keep you from actually taking those steps forward? Today we're going to talk about not just the paperwork for when you get pre-approved, but the paperwork afterwards. Because yes, even though we ask for documentation to verify certain things during the pre-approval process, there will be further documentation that will need to be added to the file after you go under contract. When trying not to overwhelm our buyers at the start, during pre-approval, we do ask for verification of your income, which could be pay stubs, W-2s, things like that, but also of your asset accounts of what you may have to close, for down payment or closing costs when you go to purchase a home loan. And we'll also do a soft pull on your credit report just to make sure that your DTI is in line for the loan program that you're going with. Now, some pre-approvals start 90 days out. So once you do find a home and go under contract, it may have been a couple of months since your pre-approval was done. That does mean we have to update all of that information again before we go into underwriting, meaning pay stubs, meaning your asset accounts to make sure that money is still there from when we pre-approved you and that nothing has changed. So you will have to submit updated paperwork for that. But also, you'll need to show the checking account or savings account where the earnest money deposit came from and how that cleared as well. Plus, if there's anything on your credit report that underwriting wants to question, whether it's addresses listed there that look like previous addresses, they will ask you for letters of explanation regarding any type of thing they see that could impact your debt to income or anything else in the file and change it to where you may not become qualified for it any longer. And what that means is maybe they see an address on a credit report and it's tied to you. They want to know how it's tied to you. So maybe you rented that home 5 years ago. That's all they want to know. I was renting that home 5 years ago. They want to make sure that you don't own any other property that you pay a mortgage on, property taxes, anything, because all of that can increase your debt to income. And as you guys know from my previous videos, debt to income is very important when it comes to qualifying for a home loan. So they dig in a lot further than we do during the pre-approval. At the pre-approval level, we look at assets, we look at income, we look at your debt to income, we look at your credit score. And if all of those things line up, then you're good to go and get a pre-approval. A pre-approval is not set in stone. It is a pre-approval. If things change or underwriting finds something that you did not disclose to us, then that could change the situation. But that's why we always do our best to ask as many questions as we can up front during the pre-approval process so there are no surprises for us or for you. But if you have any questions on any of this, please DM me and we can talk.